There we go. Okay, perfect. So audio and video should be rocking. All is good in the Matrix. Fantastic. So thank you as always for making time out in your day. I really appreciate it. We've got a lot to cover. So without any further ado, let's get to it. So welcome to the principles and tools, emphasis on tools for day trading. And here's the exciting part. Futures, sure. Options, yes. ETFs and stocks. Same tools, same process. Super excited to share these setups for day trading, all these different asset classes, the approach I use, and we've got a lot of materials, so let's jump in. All right, so first of all, why are we here? Well, what are we going to talk about tonight? You're looking at P&L of my trading from last year. Yes, last year, but here's the thing. This is a challenge to see if I could 10x an account. Pretty ideal scenario to do it, no doubt. The account started with a smaller account size. A lot of traders, they do start with about 5 to 10,000 in their account. So I sort of split the difference with 7,500. And a couple things to point out. No massive spikes higher or lower, right? Meaning no major risk to the account. So no crazy swinging pendulum. So no risk, crazy risk to the account. No grand slams, right? Because I think on the opposite side of the grand slam, it goes both ways, right? So I don't believe in those big grand slams as a way to build the account for the long haul. It's about steady account growth, okay? All right, so 2020 was so last year, no? So then the thing is, all right, where are we now? All right, so the real challenge to day trading is finding the right hours and setups to day trade and focusing on that by not getting distracted by a twitchy market, as so many, sadly, day traders do. I think all of us have probably been susceptible to that, right? I think all of us have been tempted by all the candles that tempt us to get into the market, and it typically leads to not a good place in our account. So what are we going to be talking about tonight? Something very few traders stop to think about, right? Once you've completed your technical analysis, you have the choice to take that trade as the futures trade or as an option on the stock or an option on the ETF or the stock. And you might go, wait a minute, Rog, I can do all four of those things at the same time? Absolutely, right? The decision for an option versus a futures contract is made at the same price level, all right? So our day trading topic is inclusive, right? It's inclusive of futures, options on futures, options on stocks, and stocks. We can have this conversation because the price trigger and the levels and the technicals are going to give you that option. So I've actually never fully shared the way that I look at intraday trading futures and options and the ETFs and the stocks. In other words, we've done futures, but we've never done this whole view. So how do I do my analysis? And what's the process to decide which one of these choices? Remember those choose your own adventure books when we were young? How do we decide where we're going to execute our trade? You don't have to be fluent in all asset classes. So if futures are intimidating to you, we have another alternative. If you like futures, no problem, right? If you're thinking about the underlying, that choice is there. You can choose the asset class of your choice. All the principles we're going to talk about and the indicators are going to be the same when we're talking about every one of these. They're the same and can be used on the futures, on the options, on the ETFs, etc. Okay? So super excited about this. So I guess, the one thing that I do get a lot of is, Rog, I don't trade futures. Again, you don't have to. While I will be using a number of futures examples today, you don't have to trade futures. So think about how you can express that idea in other ways. Again, everything we're going to talk about tonight applies to multiple markets. So I've never really had the opportunity to show you guys, how I decide what to trade or even what the alternatives are. So once you've completed your technical analysis, you have the choice to take these, again, through those different avenues. And here's a really exciting part. A lot of this can be done with very low cost options. And even the intraday margin can be very, very low cost. And you don't have to trade expensive contracts. You don't have to trade expensive options to move the needle. You're going to find that most of what I do is done with very, very inexpensive options or very low cost intraday margin futures contracts. All right. Okay, so stick with me. I'm going to dive into a lot of this. I'm going to introduce you into a completely awesome way of thinking. We're going to crush those limiting boundaries of, I'm a futures trader, I'm an options trader, or I'm a stock trader. You're going to learn to be all of it, right? We're going to cover all of that. Okay, so for those of you that don't know who I am, I'm Raghee Horner, and I'm the managing director of Simpler Futures and the Sector Secrets Mastery. Most of you probably know I've been trading for a while. If you didn't, I'm coming up on my 35th year actually of trading, entering my 35th year of trading. I've been with Simpler, ongoing now, just over 8 years, and I can be found in the Simpler Futures room and the Mastery and actually the options room as well. So this slide is, this image takes me back to a lot of memories and sort of the inception of where I decided to be a trader. And this is actually right around 1989. And this is the library of the university I went to, the university that I nearly dropped out of or were kicked out of, really. So in 89 to 90, I'm living up at Florida Atlantic University here in Florida, trading in my dorm room, charting in the library. And the story that you guys don't know, because I've actually never told it, was in the process of nearly dropping out of university because I just simply wasn't going to class. My GPA, some of you might know or recall, was a 0.69. So at some point I had to explain myself to my mother. And so what happened is I sat her down and I figured the easiest way to get out of the hot water that I'd put myself in by simply not attending class and at this point doing very poorly is I showed her my statement. And at that point, and I was actually thinking about this, it's been a long time since I thought about that. That was the first time that I 10x'd an account. I was trading futures and I turned a 2K account into 21K. And I thought this is going to be how I convince my mother that it is okay that I am flunking out of college. And so this is what I've been doing while not going to class. And I'll give my mom credit. She said, you better pass. You're gonna graduate with a degree. But I get what you're doing. And she did support me. She did support my decision. She just said, go to class already. So she was right. And so that's kind of where things really got serious and started for me. All right. So the proof of any trader's success is the consistency. You might remember that I do not recommend people go for home runs, right? The P&L is always moving upward, and without that roller coaster, nauseating experience, right? It's about steady, dare I even say boring account growth, not home run hitting. Let's look at some charts together. Before we get there, a couple basic things. I've never blown up an account. It's just a process of understanding risk, position sizing, and just some simple math. We follow the plan, right? We always have a plan and we follow the plan. While not every year was wildly profitable, I've never had a year where I was not profitable, right? Doesn't have to be a big year, steady, right? Steady. I just was reading something today where Jim Simons, some of you might know, the Renaissance Funds, big book came out, very celebrated hedge fund guy. Last year in 2020, 3 out of his 4 funds, I believe, lost 20 to 30%. Hey, he's a genius, right? No doubt. We don't want years like that, especially in 2020. Okay. So it may not sound sexy to have steady growth, but when you think about that year after year, that is what we're looking for. So the whole idea is there more money in our account December 31st that there was in January? That's consistency. And that's what I've been doing for 3 decades. So let's get to our first chart here. This is the S&P futures. Remember, whether you trade futures or not, don't sweat it. Don't get too hung up on the symbol in the upper left-hand corner. We're going to talk about day trading. We're going to talk about, yes, it can feel intimidating. It can feel like, well, especially when it comes to intraday, it can feel like you're being inundated with so many candles, right? Very little time to make decisions. The fear of making too many trades. How many folks have been there? Yes. So the first thing we address is how do we make this process simpler? Yes, pun intended. We use signals for what the market is offering us for high probability setups. We use signals. In other words, we're looking for very specific setups and only those. We're not freestyling it, right? We're looking for very specific setups. In this case, I bought the S&P right 3690, which is in this area here, exited just below 3715. And what you'll notice is I have signals. I'm looking at where this market could exhaust. I'm looking at actually the signals from the indicators that are telling me, hey, Raghee, this is good support. This is good resistance. And yes, I'm simplifying some of the process, but every single thing on this chart has a color-coded key, we'll get into that, or an actual signal giving me insight into what I need to do. So let's talk about signals. Signals made easier, all right? First thing we're going to talk about is the V-score. The V-score is a great tool, but I would say that because I created it back in 2008. Wouldn't it be nice to have an indicator that directly points you to key levels? You've got one now, just look at the arrows. So let me show you what you can do with V-score and what it is, all right? V-score is the standard, and it's going to sound very intimidating, but we've simplified it with the signals. It's the standard deviation of the volume weighted average price. So what's the takeaway from that? The VWAP, or the volume weighted average price, is a volume derived tool. It's focusing on how much size is at certain levels, not just price, not that one-dimensional look at price, but how much size is at current levels. So if you take a look here, signal showing me that this area is support. All right, now notice we got in about 403, which is right in here. Take a look at the signals, not just one, but two. And then I got out just in front of 500, and you'll notice that was actually our signal up in here. That'll tie up with that right in there. So the idea is what? Trusting an indicator that's looking for different exhaustion levels. What does exhaustion mean? Are we going to stay at support and move higher? Are we going to reach resistance and possibly stall out? Very different look at the market than most day traders do, right? So this is the V-score, looking at volume to understand where and when there might be support and resistance. And the neat thing about the V-score and a lot of these tools that we're talking about, these volume-based tools, is that these levels are not going to be obvious to all market participants. In fact, they're not going to be obvious to most market participants that are looking at only price. But I do love price, right? We still want to use price. And for that, we have arrows for, or signals, right, for the Darvas. Some of you might know the story about Nicholas Darvas. Now, here's what's kind of cool. While I was busy working on improving the V-score, then I thought, wait a minute, why can't we get signals for Darvas too? So it truly can become an at-a-glance set of indicators, right? My arsenal now has a certain automation to let me know, hey, Rog, the criteria has been met. It's time to act. Yeah. So Darvas is a price-based tool based on the 1950 to 1960s. Nicholas Darvas developed this process, so certainly time-tested, developed this process to really identify breakout and breakdown levels, support and resistance, right? So let's talk about what these look like here. Looking at these Darvas tools now, again, signals, there's my support right in here. So if you notice, we got in around 31,140. This is the area, got out around 34,265. So up in this area here. And again, what I'm relying on is the market's suggestion based now on not just volume, but volume and price, right? Volume and price to tell me this could be exhaustion. Let's be proactive about, getting out, paying yourself while you can, not when you have to. And again, when it comes to getting in, is this an exhaustion level? Could this level be a level of support that would equal for us a really smart, low risk or risk controlled buy, right? So for those of you that might be momentum based traders, in other words, you're buying through breaks of resistance, this is a little different, right? This is, can I buy support And can I take profit at resistance? Or can I sell at resistance and take profit at support? So it's a little different in approach, super high probability and much easier to control risk oftentimes than momentum type trading. Okay. All right. So now let's start to stack these. This is where this gets really powerful. We mentioned the volume-based analysis in the V-score, the standard deviation measurement of VWAP. In other words, what is the size behind price? What does size tell us, by the way? Commitment, conviction, conviction, a certain amount of opinion that's concentrated at that level, right? Okay, so now we're going to take that volume, that size, that conviction. As they say, size matters. Yes, exactly. And now we're going to add the price. Now remember, most traders never get past price. So let's take a look at how these look when we have both working for us. So here's the Dow. Take a peek here. All right, so let's talk about where we got in and got out. We're stacking our tools now. The first opportunity came back in here. So there's my V-score, okay? And then I had my Darvis. Now, I will tell you, in this particular situation, I was pretty cautious. There was a certain environment currently in the market that made me a little cautious. Cautious doesn't mean I can't take the trade. It's going to help me with a more prudent position size. With a second opportunity here, notice how the tools are stacking. One's giving me a heads up that I'm getting really close to a volume-based support level, and the other one confirms that with price. Once again, volume-based support, price-based support. There's another tool at work here, but we'll get to that in just a moment. So where do we get in? This area right here, and this entire trade was pretty much built around the 685 area, 33,685, and it moved all the way up to 33,947. Now, at this point, some of you might be saying, well, Rog, okay, I can see the price movement, but what does that really mean in dollars per contract, right? So let's break this down. This is the Dow, and the Dow has $5 per point value. So let's take the 33,947 and 33,685, right? That's a total of 262 points at $5 a point. Now, if you take a look, I actually traded 3 contracts here. So you might say, wow, Rog, 3 contracts. How much did that cost you to trade 3 of those? This is per contract. So this is one contract here. Each contract's initial margin was $500. So I can control a single YM futures contract for $500. So when I said that it's very budget friendly, you don't need to, put on size with a lot of capital requirement. In this case, it was $500. Now, when we get over to the options examples, we'll talk more about how we keep costs low. But intraday, day trading futures initial margin is very affordable. Doesn't mean you want to load up, but again, I was able to trade 3 contracts for $1,500. That $1,500 yielded me a $3,900 win. Okay, that's the math behind it. The initial margin requirement is very, very low for not just a number of indices, but energies, currencies, and a number of other markets. Okay, like I said, this isn't just about futures, but this is a good place to start. Next is the S&P. All right, once again, let's talk about stacking the different tools. We're going to talk about the HPMR in this example. For those of you that are not familiar with what an HPMR is, all right, it is an acronym for hourly price movement range. Hourly price movement range. This is a calculation that I created to use the typical number of points. For a lot of traders, they're not aware of each hour of the trading day in ETFs, in stocks, in anything, Forex, futures, crypto, you name it. Every hour of the day presents a different amount of price movement. And so what we do is say, wait a minute, if we know that about 68% of the time, the S&P between say 9 and 10, 10 and 11, 11 and 12 moves a certain number of points, I don't know if those points are up or down, but I know we move in sort of this envelope of volatility. Why can't we project what the typical support and resistance might be? Okay, here's your support based on volatility. There's your Darvis. You can see that little arrow right in there. There's your Darvis price-based. So I've got volatility, price, and now volume. Here's your volume confirmation. This is putting together hourly price movement ranges, the V-score, and the Darvis. And what I just explained there is really important. Notice I haven't told you, hey, we're going to get in when any one of these fire off. Notice on every one of these examples, I have at least two, if not all three of our factors at work: price, volatility, and now we're talking about volume via the HPMR, these volatility zones. So we've stacked all these together using the hourly price movement range and Darvis, okay? All right, so moving on. Consistency. Now, I talked about consistency in the tools. Notice that we weren't sort of using a completely different formula. We didn't wander off and use a different set of tools. It's the same set: price-based tool, volatility-based tool, volume-based tool. Consistency starts at the analysis level, right? If your analysis is haphazard, your results are going to be haphazard. It won't be repeatable. You can't replicate it. Rinse and repeat, as they say, all right? You can learn to be consistent. The first step is going to be consistency in your tools. So any trader who has a solid plan and proven tools, and I'll even say not just proven tools, but multi-factor tools. In other words, this might be the first time that some of you are looking at tools that use volume, that use volatility, and not just price, right? So multi-factor proven tools, you will be able to apply the same strategies to futures, options on futures, options on stocks, stocks themselves, options on ETFs, and ETFs themselves, right? They're all going to be the same analysis, same setup. So what do I mean? So once we complete our analysis of where we think the market is going to go, we can then apply those same principles, these same tools, these same entry and exit zones to take advantage of those moves through, as I mentioned, sort of the choose your own adventure of, you know, Ron, I want to trade futures. Someone else in the room might say, you know, instead of the ES, I'd really like to trade options on the SPY or options on the SPX. Or, you know what, I really like the outperformance today in the XLF. So I'll get more specific to a sector and use the ETF. That's what I mean by choose your own adventure. All right. So how does that work, right? How does that whole concept work? Let's jump into the big picture view. And I love this because a lot of traders pigeonhole themselves into a very specific corner of the market, specific symbols, and they don't realize all the opportunity in front of them. So in the earlier example, I talked about the S&P, right? That's a futures contract. The index is great for an overview of what's going on in tech, in financials, in healthcare. It's not just for futures traders, all right? And then I have the SPY that gives me the alternative to the S&P. But the S&P analysis and the SPY analysis are the same tools, etc., right? The NQ, QQQ, YM, DIA. The analysis is the same. Get your trade set up together, again, using those signals we just talked about: price, volume, volatility. The same setup is going to apply to the NQ as it would the QQQ. The only difference is one is executed as an option, right? So I'll play an option on the QQQ, and the other can be a futures trade. And by the way, if you like micro futures, no problem, right? Micro futures, mini futures, options on the QQQ. Now I'm really going to blow your mind. What about the heavily weighted sectors within the QQQ? That's going to lead you to possibly better opportunities. So again, you don't have to stay pigeonholed in a very specific corner of the market. The setups, the correct price level, the stop, the targets, these do not change, right? We're using the same tools, just a different symbol in the upper left-hand corner. So that's the big picture view. You know, untie yourself from a specific market. It's going to free you up to be a better trader year after year. So here's another example. Let's take a look at the S&P. All right. Same set of indicators, same set of tools. Here's my V-score telling me that I'm bottoming out. But look, this V-score, nothing up here, right? Think about volume, volatility, price. Okay, well, here I have another V-score. Okay, still nothing really helping me out. Another V-score. And shortly after, there's my price-based ARVIS. Use 2 reasons to get, look, if there's anything you can do with the set of tools that you have right now, do yourself a favor. Find 2 reasons to get into a market. 2, right? In other words, make sure you understand the environment that you're trading. In other words, is it a bearish environment, bullish environment, neutral, right? That's always a good foundation. Then ask yourself, am I just looking at a price-based confirmation, price and volume, or do I have price, volume, and volatility? You get to choose how much confirmation you prefer. Some traders might be more aggressive than others. Again, you can choose this for yourself. So when we get in, this is a 58 entry, 41.58, got out at 78. Now, for those of you that are new to the S&P, really simple, the 20-point trade at $50 per point, which is $1,000 per contract. $500 margin requirement. You'll notice in this example, I actually traded 3 contracts. These are not huge positions that I'm putting on. The P&L that I showed you all earlier, I'm not trading 20 and 30 contracts. Remember how much risk that also includes. But speaking of risk, some of you might say, Ron, those futures look interesting, but how would I play that if I don't want to trade futures, micro or mini? No problem. That same area on the ES that triggered a trade for me, we're now looking at the same time frame and same bulk of candles on the SPY ETF. There's my setup. So in this case, we're looking at this market trading at around 415.20. That's where I start to look at buying the calls in the S&P. And then the same way in which the S&P futures moved higher, I'm managing the SPY options, in this case, call options. Now, let me mention something about cost on the options. One of the neat things that we have now in the SPY and QQQ, not across all options, but 2 of the most popular, is we have Monday, Wednesday, and Friday expiration. What that means for us is that we can get even lower cost options because we don't always have to trade the Friday expiration anymore. We can use the one that's closer and it costs less. So if an option's closer to expiration, it's going to be less expensive. But if we're focusing on, the first 2 hours a day, or we're definitely going to be looking to get out by about 5:30 to 10 to 4, right? We're going to be out by the end of the day. What do I care? What do I care about the expiration? I don't mind to trade. And if you're uncomfortable trading same day expiration, heck, go out to the next expiration. You have that choice. And with this choice comes lower cost. We've actually, this morning we were looking at NASDAQ options for 70 to 80 cents, 70 to 80 cents that expired on Wednesday. So very low cost. Okay. All right. Let's use a NASDAQ example. So again, 3 factors at work here. I've got my V-score down in here. V-score was firing off and firing off and firing off, but no price confirmation. Right here, what came into play? I've got my HPMR. And by the way, the HPMR would have set you up for a buy here. HPMR, again, the hourly price movement range, which is this shaded zone right in there. Okay. So HPMR would have gotten you long here. But what happened a little bit later on, about 35, 40 minutes later? Price, volatility, and volume came together. Now, if 2 out of 3 was fine, you would have gotten in a little bit earlier with another opportunity again. And then the market started to move higher. So 2 to 3 tools stacking, giving you the setups. But that was the NASDAQ version, right? $500 margin. This was a move from 650 to 795. Very nice trade in terms of $20 per point, right? So again, you guys can do the math on that. But what I want to rush you on over to, because this is where it gets exciting. Okay, Rog, I don't trade futures. No problem. This is the QQQ, right? It's the QQQ. what happened here? This is something that I want to mention. And I think a lot of ETF options traders miss out on the value. Now, listen up. If you like trading QQQ, listen to me now, believe me later, friends. Watch the NASDAQ. Watch the NASDAQ. In fact, yes, the signals were great here. V-score was telling me we're near the buy. HPMR kicked in. Darvis kicked in. But the NASDAQ futures can actually set up your QQQ. And the advantage on that is you don't have to look at so many charts all at once. You can look at the NASDAQ and say, all right, I can trade the QQQ. I don't even have to look at the QQQ. All I need to know is what an at-the-money option would be, and I can go ahead and get busy with that. Now, as far as the HPMR here and the V-score and the Darvis, let me show you each one of these. Here is your Darvis right there. Here is your V-score right in here. See all these little V-scores, every one of these arrows down here. And then the last one is your HPMR. And it's a subtle, but it's a shaded area. This area right in there. So that green area. And then we also have the same area to the upside. That's the resistance up in here. So if the HPMRs aren't popping out at you, this is the support HPMR. This is the resistance HPMR. And these are volatility-based calculations that use how many points within a certain hour of the day does a market move. Notice we have these on the NASDAQ futures. We have them on the ETFs. We have them for stocks. We have them for many, many markets because every market has sort of a rhythm that it does tend to follow. It's remarkable how commonly the market will trade within that rhythm. All right. So there are the HPMR. So there's all three tools: price, volume, volatility. Do you see how they're all coming together time after time after time? And the more confirmation you have, well, the better. Okay. All right. So volatility. All right. Volatility is, for my 2 cents, the most overlooked and the most valuable part of being an options trader. It's the most overlooked because a lot of traders don't know how to harness it. And the ones that do, well, volatility is absolutely going to be your bestie. All right. So the secret to day trading is timing. And I'm going to say even timing, another way traders might understand this is to harness, as we call the MOMO, the momentum. Okay. The secret to options day trading is that momentum, that volatility. Timing and volatility in its culmination is momentum. Harness that momentum, right? Use it, and day trading options offers us an edge. You might say, well, what does that mean, harnessing momentum? Well, think of it this way. Let's say you get a big red candle coming down to a price support level that has the V-score and the Darvis tool is starting to ping, and you have an HPMR sitting there. So you're coming into a zone that you want to be a buyer. And as this market is selling off, what is this mindset behind most traders? And more importantly, what is the mindset behind the people writing the premium for the option you're about to buy? The puts are more expensive. That's what people will be scrambling for. And the calls in a down market will be less expensive. What are we looking to buy down in this area if we're expecting the market to move higher? We're looking to buy a call. And because we can harness momentum, I think what we're able to do is take advantage of a momentary imbalance in the force. Yes, we're talking the force now. But what we're able to take advantage of is a momentary imbalance in that pricing. The call is going to be cheaper as the market's moving lower. Most traders do the exact opposite. Remember I said that we're talking about exhaustion levels. Where's the support and will it hold? Where's the resistance and could it hold? Yeah. That's how we use momentum to give us an edge. So where do you start? All right. So far, we talked about volume-based tools, volatility-based tools, price-based tools, the signals around them, right? Stacking them up. So where do you start? So far, I've tried to hopefully kind of paint a picture of you being able to move fluidly and fluently through multiple markets, right? When we identify ourselves as simply just a futures trader or just an options trader. We're creating this sort of tunnel vision in our trading life, and we're going to be missing opportunities because we've lost the ability to see what is around us. Remember, we had that big picture look at the market. So once you start realizing you're a trader, period, a lot of these overlooked, these benefits that most traders just simply don't see, right, is that they can execute the idea in different asset classes, and they can use the same trading strategy in multiple markets. You can use the same trading strategy in multiple markets because you're looking at the big picture. You're not trapped by that tunnel vision. You're not trapped by that self-identification of, well, but I'm a futures trader. I don't trade options, right? I don't identify myself like that at all. All right. So we know ultimately what each one of these indices are, right? The Dow, the NASDAQ, the S&P. But let's think about something else. Did you ever stop to think about the stocks and sectors in each one of these indices, right? What's inside these indices? And that's where we can continue to dig deeper and find more and better opportunity. So let's talk about stock and ETF options, right? The other opportunity, as we were talking before, is S&P to ES, NASDAQ, ETFs to the NQ, etc., right? So another opportunity of the ETFs, you don't want to trade the individual, if you don't want to trade the individual stock or the future, maybe your analysis has identified that going to a more sector-based look. In other words, think of it this way. If the S&P is moving, S&P is a good example for that. And you'll see here there, the X financials. If the S&P is moving, there's usually one of three markets that are going to be moving with it: financials, healthcare, or tech. Those are three heavily weighted sectors within the S&P. Okay. For the XLC, this is the NASDAQ. XLC, the communication sector, is the second heaviest weighted sector within the NASDAQ, and discretionary is the third. And this is going to also be your QQQ, XLC, XLY, right? Follow the sectors, know the sector weighting. It's not difficult. Once you understand the major sectors, now, again, you've cracked open that index to find other groups of stocks that might be outperforming the broader index. So you can find the ETFs with the highest concentration. That's another really important trick right there. A lot of people underestimate the power of high concentration weighted ETFs in this market. So you can find the ETFs with the highest concentration, and then you can set your trade up on that ETF. For example, let's say you like Apple and Microsoft at any particular day. For a lot of traders, trading both might be cost prohibitive or even too risky. But what if I told you there's a simple ETF that has both those stocks heavily weighted within it? That's what I'm talking about. Okay. And for a lot of you, maybe you've never thought about those stocks inside a single unit that you can take advantage of. So I hope I'm starting to paint a picture of, oh, got it. Okay. So what if I want to trade Amazon or Tesla? That's the XLY. Okay. So let's take a look at some examples. All right. Now that I've kind of shown you how we can bridge this broader index look, NASDAQ futures or the NASDAQ ETF, to the sectors, and now we can dial it into even some stocks eventually. Make sure you're going through this with a progression, though. What's the progression? Index, sector. This is the number 2. So sector and ETF is pretty much synonymous. This is that second progression: index, sector, and then finally stock. Okay. So here is the XLV, right? Again, index, sector, stock. Where does XLV land us? It's actually mostly the S&P, ES or SPY. Now you know it's kind of a 6 of one thing, half dozen the other. Okay. And then XLV is a heavily weighted sector within the S&P. And if it's outperforming the S&P, great. There's your Darvas signal bouncing right off the wave. Nice move to the upside. Notice the setups and the tools aren't any different. All right, here's the XLF. Financials, heavily weighted within the S&P and the Dow for that matter. B-score, Darvas, just moves up to the top of the range. This is how you can day trade the options on the XLF. And by the way, what if you wanted to trade a certain stock like JP Morgan or Bank of America that day. If you want to trade those stocks, it'd be nice if the S&P index, sector, stock. So a lot of times traders start at the stock level and then they wonder where the trade goes wrong. It probably went wrong because of the broader market implications at the index level or at the sector level. Okay? Index, sector, stock. Okay, so let's take a couple more ETF examples. All right. Okay, so in this situation, there we go. In this situation, we're taking a look at the QQQ. All right. Now we're going back to the NASDAQ. We're going back to the NQ. All right. Think about the tie-in. But what else can we move with what else can we trade with the NQ other than the QQQ? Well, remember, we have XLK, XLC, XLY. Start thinking this way. Start thinking in these groups, because you might say, Ron, how do I remember all this? It's just repetition. You just, okay, K, C, Y, got it. In this case, QQQ, once again, stack the tools. In this case, we had an HPMR, volatility, and we had a Darvis right in here. That's going to be my price. I have 2 out of my 3 tools working perfectly. The V-score didn't quite chip in, so I don't want you guys thinking, oh, well, the V-score isn't there. Yeah, I mean, if you say, look, my trades require V-score, then you wouldn't have taken that. But if your criteria is, hey, I'm looking for 2 of these to stack up. All right, there's a great example of being able to trade the QQQ. What if the XLK, XLC, or XLY had the same, if not better setup? Do you see now? You can start to cherry pick a whole lot more effectively. All right, let's look at another example. And this is the SMH. All right, semiconductors. Isn't this under that QQQ umbrella? So let's say the K, XLK, XLC, and XLY don't look so good. I can start looking at semiconductors. All right. V-score and price. Now, in this example, I'm showing you something a little different. Okay. I'm showing you something a little different. And this one is being patient with an early setup. We only have one signal here. All right. And what we did, and this is something that, I'll teach you a little bit more about, which is anchoring. But where do you anchor your tools? In other words, where are you measuring the psychology forward from? Normally, I'll start studying the market behavior starting as early as 7 a.m. In other words, I'll set my tools to 7 a.m. But in some situations and in some stocks, we're actually better off anchoring to 9:30, especially when there's a dramatic move at the open. So noticing certain moves right on the open will be keys to, you know what, I may want to re-anchor. And these are slight adjustments to these tools, which give us really nice setups. All right. V-score, price. Got really close to the V-score, price. So maybe you chose to forego this particular setup and wanted both the Darvis and the V-score signal, 2 criteria. Again, nice little opportunity. And, I wanted to mention that earlier QQQ example, if I can jump up there. There we go. In this earlier QQQ example, a really common question is, Rob, what is this thing going to cost you? And again, remember, with the Monday, Wednesday, Friday expiration, we have a lot more ability to minimize costs. But this was an option that I was able to buy for $3.50 and liquidate later on at $4.05. So it was a 50-cent options winner that took just over an hour. This is probably about 65, 70 minutes, right? So day trading, a relatively inexpensive option. Now, I will say that NQ option was a little bit pricier than I usually take. Sometimes they're far less expensive, but that one's a slightly more expensive. Again, $3.50 if that's something that you consider pricey. But ask yourself, $350, that's the cost of that option. Because they're relatively low cost, you can scale into maybe 2 of them. Would that be comfortable? $755, $750. Can you scale into maybe 3 of them? Buy 3 $350 options, right? Okay, that brings up a really big point that I get asked a lot about. And that is, okay, Rog, I get it. We can day trade futures. We can day trade options. 4 factors, look at time, look at price, look at volatility, look at volume. The signals make it easier. All right, but what about pattern day trading? So, and how much capital do you need in your account to do some of what I'm talking about? Well, early on, I mentioned, $500 initial margin for futures. And I try to keep most of my options trading, quite frankly, below $4 an option. All right. So that gives you an idea right there as far as account size. But what about getting in and out with the kind of frequency that I'm talking about? How do we deal with pattern day trading? And so some of you might say, well, what is pattern day trading? I think most of you probably know what it is, but what the heck is it? All right. A day in our trading is basically a day trade is when you open and close it in the same day. I think everybody knows that. Being flat by the end of the day trade. You're a pattern day trader if you make more than 4 day trades in a rolling 5 business day period. Okay. That's just the rules. And if those trades make up 6% of your account activity, don't worry about all that. If you're day trading, as you can notice here, if you're a pattern day trader based on your frequency of trades. So wait a minute, Rock, I can't trade more than 4 trades a day. Oh my God. I mean, 4 trades a week. I might have 2 or 3 trades a day. All right. Here is the easy fix. Okay. It's really, really simple. And it's how I day trade and it's how I options day trade. A cash not margin account. Wait a minute, Rog, that means I can't do, spreads. We are buying. Everything I'm showing you here is straight up long positions, long calls, long puts, and you can do that in a cash account. So if you want to have margin and you want to put on different types of trades with different types of spreads, and that's fine, but you need a margin account for that. And I wouldn't recommend day trading with that because now you're going to have to jump the hoops of avoiding the pattern day trading. It's a pain in the neck. Okay. You can actively trade and not be limited by this pattern day trading. Takes a little planning. All right. In other words, you need that cash account. And you need to separate those trades where you feel you need to put on a multi-leg strategy called vertical, debit spread, whatever. Okay. But the way that I trade, here's the bottom line. It's not going to be an issue. This pattern day trading is not even going to be an issue because we're going to use cash accounts. I highly recommend that. It's the easiest way around that. Okay. It's the easiest way around that. Are there downfalls to that? Are there, certain things that people may not like? People ask how many days to settlement. If you made a profitable trade, what does it matter? Right? So a lot of people say, okay, but the settlement, T+2, T+3, gang, we're just looking to put money into our account and not be limited to how many round trips we can make a week. Okay. So what if I have a smaller account? We dealt with this pattern day trading issue, but what if I have a smaller account, right? Day trading is, I know a lot of people say day trading is risky. Bad day trading is risky. Over day trading is risky. Gang, being in the market is risky, but we are risk managers, right? We understand that we can trade different types of assets with different costs related to them. And remember, cost is a part of your risk. And I believe being flat by the end of the session is actually a smart way to control risk. What happens overnight? You don't care. A lot of brokers will give you reduced margin requirement as little as $500. Some will use, say, 25% of whatever the larger margin, the overnight margin is. So there are ways to make the futures trading very, very inexpensive. You can trade micros for a very little amount of money. And again, when I day trade stock and ETF options, my target cost per option price is $1, sometimes less, but up to $4.50. I'm usually not trading an option that's higher in cost than that. So that's $100 to $450. All right. Okay. So, but larger accounts in day trading, scalability, right? That's definitely something that I talk about a lot. Scaling doesn't matter if it's 5K, doesn't matter if it's 5 million, right? Doesn't matter. The principles are the same. Hey, by the way, the principles were the same if we were looking at the NASDAQ futures or the QQQ ETF. All right. What changes for us in scalability is simply the number of contracts. So if you want to trade 3, for example, $2 ETFs because you want to keep your budget around $600 and your risk limited, great. Some traders in these very liquid markets might choose to trade 30 of them. They're scalable because we're talking about liquid markets. They're affordable for traders who are starting with a smaller account. They're equally actionable for traders with larger accounts, okay? So what have we covered so far tonight? Let's do another recap here. All the principles we're talking about apply to futures, options on ETFs, options on stocks, and the underlying stock themselves, okay? Once you've established a solid setup, then you can decide what you want to trade and where. In other words, futures, micro or mini, do I want to trade the options? Do I want to trade the options on the ETF instead of the option on an individual stock? Maybe I want to buy the stock, right? The signals are going to be the same, right? So by truly understanding what drives the market, we talked quite a bit about high concentration weighting when we talked about the individual stocks and the ETFs. We talked about cracking open the index so you know the sectors within them. You're understanding what drives that market, all right? And again, scalability. These strategies are equally applicable for small accounts, 2K or 2 million, doesn't matter. 2K, 200K, 2 million, it doesn't matter. Scalability. And you can, and dare I say, you need to, for the longevity of your career and risk control, become a multi-asset trader. A lot of the consistency comes because we have the choice to pick a better setup. All right. So that means, by the way, gang, you know we're having this class coming up this Saturday. And if you don't, this Saturday, the 26th, I'm going to be taking you through my new day trading playbook. All right. What is the new day trading playbook? Day trading futures, options on stocks, options on ETFs, having that fluidity, even options on futures if you want to go that route. Why can we do this? Because we're multi-factor traders now. Time, price, volume, volatility. Why is it easier to understand to do now? Because we've automated so many of the tools. We've automated and then we've automated some more. So the tools that I showed you, the V-score with the nice little arrows, right? The signals, that is included in all three packages. Every class level that you're going to consider, the indicators come with it. That DARVIS, the price-based signals, those arrows that were on the chart that showed you where price was exhausting, the DARVIS is also included. So I'm going to show you how to use these indicators. I'm going to show you my setups and how we trade across multiple asset classes. All right. Now, we also have the 2-day live trading, right? So 2 days of pro live trading. So after you take the class with me Saturday, we go live into the market. We put these trades to work together live. And I'll tell you what, ever since this slight shift in the FOMC, shortening the time frame, being more nimble has been way more important because the reflation trade has changed the trajectory of the Dow and the Russell, but it's kept the NASDAQ and the S&P looking very, very good. So the corners of the market that have longer term trends are fewer now. And this happened within the last handful of days. And now we've got the ability to say, you know what, we'll just shorten our time frame until the market sort of gets its sea legs. We'll shorten the time frame. So you have the choice of 2 or 4 days. So 2 days of live trading with the pro, 4 days of live trading with the elite. All three get the indicators. Okay. All right. So then this is really important. You're definitely going to want to make sure you get on this, which is tomorrow, the indicator installation session. So before we meet on Saturday, you're going to have an entire day on Friday to look at and work through the tools, because tomorrow we're going to have the indicator install session at 5 o'clock. Okay. Thursday? Yeah. It says, okay, Thursday and Friday? Oh, is it Friday? Oh, okay. Well, you have all of Friday. Yeah, Trisha's telling me, get your days right. So tomorrow, you're going to get the lessons. That means on Friday, you have a whole day between the indicator installation and the class. Okay. So tomorrow, Thursday, we have the indicator installation. So you'll get all the indicators and then the class is on Saturday. Well, you know what? Yes, you're getting the VWAP Max package with the updated V-score right here, the V-score signals. and of course the Darvis. But let me mention something, and it's already in the class resources. I've given you guys a few bonus tools. You have my volume flags, which is a very cool tool that sits at the bottom of the chart that gives you a read on abnormal volume as opposed to what's normal and whether or not we're ticking higher or lower than what's normal. So you have a great volume gauge, and my HPMRs, which will take you through. Now, gang, heads up, the HPMRs are a volatility tool. Those flags, those clouds that were on the chart, these things, let me go back and show it to you real quick, just to jog your memory. Those things right here, that's the HPMR. HPMRs that you will take you through this class and will take you through the live trading. So those do need to be updated as volatility does change, but what you have, I've just recalculated them. You will have exactly what you need for the class and for the live trading coming up through June and July, okay? So let's get to some of those dates. Our pro live trading is June 30th and July 7th. And then we'll continue on with the elite trading July 9th and 12th. In all the live trading, you will have the alerts. So let's say, you're going to be in and out of the session, no problem. Or, you're going to keep up with exactly what I'm trading. I will be setting up the trades with you all in the room, and we will be sending them out as alerts. So your phone's going to buzz, you're going to see the setup, and you'll be able to follow along, hopefully in a much easier, clearer way. All right. So you'll be looking at the same exact opportunities that I'll be I'll be sending out and trading live with you all during the 2 to 4 days of live trading. Okay. All right. So then that takes us to, well, of course, everything is recorded. So when you want to review live trading sessions or you want to review the class, you can go right back. If you want to re-download your indicators, I've almost every class had a chart book. So during live trading, I'll do a lot of screen captures because nothing, for me, the benefit of having, dozens and dozens of examples that we've scanned and looked at, nothing can compare to those screen shots. So you can see where the arrows and the signals lit up, why we took certain trades, why we passed on certain trades. So everything is recorded. And we also, I'll usually throw in a chart book after live trading is done. So you have plenty of resources. We, of course, now accept PayPal credit, which is cool. And if you want, we haven't done this before, by the way. We've never done this before. I know some of you just want to join me for live trading. Now, let me remind you, you do not get the bonus indicators with live trading, but if you just want to join me for the 2, I forgot if it's 2 or 4 days. Is it all 4 days?
2 packages.
2 packages? Okay, so you can, okay, you can do 2 or 4 days with me for the live trading, but please know it does not include the class and it does not include the indicators. But I realize some folks said, yeah, Rog, I've got the gist of what you do, but I really would love a refresher on the day trading. Can I join you for live? Yes, we do have that choice for you with this class. Okay, but please know it will not come with the bonus indicators nor the upgraded Darvis. Okay, nor the upgraded Darvis. Or the bonus tool, again, the HPMR or the volume. So let's tackle some questions here. And I look forward to seeing you on the 26th. I cannot wait to give this class. I have absolutely been just scouring my trades through 2020. And even before that, 2019, 18, and looking at the way in which I was able to deal with more choppy markets. And this was what was really interesting. The secret was in the daily analysis, the daily time frame analysis. And so what I'm really excited to tell you is if you've taken any of my day trading classes before, this is not like any of them because the emphasis really is on the clarity of the directional bias. And of course, you've got the volume tools, you've got the updated signals. So seeing the setups has never been easier. All right. Okay, so let's grab some questions. So I got a couple questions, actually quite a few about HPMR. So thank you for your patience. I hope that this has opened up a few more ideas in your mind as to what is possible when you're day trading and how fluent you can be across multiple markets. What time frames do I trade? Theo, most of the charts that you saw in this presentation were 5-minute charts, but I'll also look at the 2-minute. And in the class, we're going to look at 2, 5, daily, and weekly. So if you wanted to get a little bit better at analyzing longer term time frame charts, this class is going to blow your mind. If you want to know how important the daily is to shorter term time frames and where a lot of the mistakes for expectations for movement higher or lower or follow through is coming from, it's usually coming from overlooking the importance of the daily. So those are the time frames that I am looking for. So let's see here. Those of you that have the V-score already from previous classes, yes, the V-score and the V-score alone has been upgraded for you guys, okay? The other indicators are not included, but the updated V-score, it is updated for you if you've already got the package of whether it's Submarket Sonar or my last day trading or the package. Yes, for those of you wondering, yes. Let's see. As far as the indicators for the class, everything you need for the class is included. My free tools, Grab, Propulsion, the updated Darvis, HPMR, the V-score. Yes, everything you need once you purchase this class will be included. We'll make sure the resources are ready to go. All right. So the next thing is HPMRs, right? A lot of questions about the hourly price movement ranges. This is the nature of this indicator, right? It is a tool that does respond to changes in volatility. In other words, the volatility in the market could stay steady for the next 4 weeks, next 6 weeks, next 3 months that we don't really know. But when volatility starts to change enough, I will run these numbers again, okay? The numbers you're getting for the class are the current numbers that I'm using. I will show you how I calculate the HPMRs. It's not rocket science, but the indicator is not continually updated in terms of the class, right? You will have the current to understand the setups. You'll have the current to understand how to calculate your own if you'd like. A lot of members do that. It's not complicated. One thing that some of you may or may not know is our HPMRs, the HPMRs that I use, those of you that are members of the Mastery or the Simpler Futures room, you'll know that I do upload the ongoing HPMRs in those rooms, okay? So it's not going to be ongoing, but you will have what you need for the class, and you will have all the detailed instructions. I did this manually with a spreadsheet for a very long time, and I'll be happy to give you all that spreadsheet. Again, if you want to crunch these manually, I'll give you that. I'll teach you how we do it. I'll give you the spreadsheet. But as far as the indicator goes, you will have the current version that I'm using myself right now. Again, it could be good for the next 2 months. You know, we really don't know until the volatility changes, and then I, recalculate them. Okay, they are sensitive to historical volatility changes. So we covered that. Hopefully that explains it. And the various indicators on my screen, are all these included in the playbook? Yes. CT, yes. Everything that was on my screen, everything that I've described is included with this class. What indicators work on what? Most of what I've been focusing on is Thinkorswim. We do have some indicators for TradingView. HPMRs are not available on TradingView. We do have some of these indicators available on TradeStation. HPMRs are not available on TradeStation, but the main platform that we're using is the one that is the most popular here at Simpler, and that is TOS. As far as Tasty goes, very limited. I do not use Tasty charts. Tasty is a fantastic platform to enter trades on, but for other classes, oftentimes we'll say, look, having redundant platforms is really powerful to have multiple charting platforms, and it just works out that TOS is very much an easier platform to get all these working on. And of course, it's the most popular amongst the broadest part of our membership base. So as much as I want to be able to support multiple platforms, it's just sometimes not super realistic. Okay. So I hate leaving anyone behind, but some of it's just a matter of, coding and scripting and making this supportable across multiple platforms, which is actually really, really tough. Okay, let's see. Are the long and stop labels? Yes, that's known as the FMB clearing range tool. We didn't talk about clearing range setups in this webinar. We did talk about it in the previous. And yes, that indicator, Jeff, is included. It's what we call the clearing range tool. It tracks volatility. It tracks the breaches of the clearing range, as well as the zone that I like to buy after that. And that is included. Yes, I should have included that. But yes, that is included in the class. If you don't have it, you got it. As far as the VWAP, vProfile, yes, all those tools are included. So CT is asking VWAP, Darvis, what about VScore, VScore bands, vProfile? Yes, CT, looking at what you're asking, grab wave, will those be included in the strategy class at all 3 levels, and the volume labels and the current HPMR? So yes to all of that and those bonuses, okay? Let's see. How do you identify the exit? So Theo, just like I was looking at the green arrows, either on the VScore or on the Darvis on the lower end of the range, well, on the flip side, we have red arrows on the VScore and red arrows, those signals, on the Darvis as well. And there are some other things that I'll look at. It's not just arrow to arrow, although that does oftentimes work really well. But there are a couple of other levels that time-wise we need to respect, and that will sometimes be factored in for targets, like a clearing range high, for example. Okay. All right. So next up is building the watch list. So we'll get into watch list building. Yes, we'll absolutely get into watch list building. You saw a little bit of that in this presentation where we went index, sector, stock. It's just that process repeated down to the stock level. So what index is relatively outperforming, what sectors within that index are relatively outperforming, and then what stocks. So it's a top-down approach. And the JT multi-trend and the JT flags, which we did not talk a lot about, but those 2 tools which are included let you know if a market's bullish, neutral, or bearish, and we rely on those very much. Okay. As far as anchoring the VScore, I will toggle between 2 times, and we're talking about intraday anchoring of the VScore, and we do use time-based anchors. And it's just 2 time-based anchors, and I'll show you when to switch from one to the other. We don't switch very often. The switch will occur based on price action in the morning. I gave you one example like that, where we saw a sudden sell-off in the morning after the bell. And there is one easy VScore time shift to consider in specifically those situations. All right. Let's see. Lots of good points. Thank you. I appreciate that. I absolutely do. Let's see. Jim says, I have 2 accounts. One's cash, one is margin. Brilliant. Can I day trade the cash account? 100%. I have not run into any problem. A cash account is not susceptible to pattern day trading, period. Yeah. Let's see. What else do we have here? Yes, this is absolutely available for recording and will be sent out shortly for those of you that may have missed some of this. Stevie B says, we are booked and ready to rock. I love it, Stevie B. And I'll see you tomorrow in the indicator with install with Duncan, and then on Saturday. Super excited. Let's see. Can you use scans? You don't really have to. Maral, I'm going to show you some layouts that I use to easily visually scan the most relevant stocks in sectors and in indices. It's actually a layout that I use. It's not even a scan. It's actually a layout because you want to see the relative outperformance, and you can't see relative outperformance in a scan. That's one of the shortcomings of scans. The way that I'm going to show you how to scan the market is completely different, and we're going to use a specific layout and the weighting of the stocks in the indices and in the sectors to do it. Okay. Really simple, really simple. You're going to be amazed how much simpler the approach is with the automation of the indicators and with the process that we're going to talk about. All right. So all the indicators are included that we've talked about. So those of you that are wondering, are these indicators included? All my free indicators are included. The new upgrade for the VWAP Max V Score is included. The upgrade for the Darvis box is included. I've thrown in some bonus. So my free indicators, of course, are included. I mean, most of you that have been following my work probably have it. HPMRs for the current volatility is also going to be with the download. In fact, it's already in the downloads resources for you guys to take advantage of as soon as you sign up for the class. And yes on the indicators. In fact, what we've done for TOS is we've got a shared link to make it super easy. So when we're in the installation class tomorrow, it will all be made absolutely clear. And yes, all these indicators that I've shown you in the last 2 webinars are included. Okay. As far as updates, as the volatility changes on HPMRs, right now, the way that I am sending those out is via either the Sector Secrets Mastery or the Futures Room. And we'll figure out something. I don't know what the fix is going to be for those who say, Rog, I really want to keep doing the HPMRs, but even though you've given me the process and taught me how to do it in the class, and I'll give you guys that spreadsheet, I want it automated. We'll figure something out, about that. But right now it's in those 2 rooms, the ongoing HPMRs for the market. Can you use the Viper? No, ChartViper doesn't create the HPMRs, RJR, but I do get the data from there. You got it. Yes, I do get the data from there. And we will have a fix for the HPMRs. Yes. I mean, when I do teach the HPMRs, I do it in such a way where you guys can, again, it's simple arithmetic. Do the arithmetic on your own. We will have a solution for ongoing. Yes, there is a lot of demand for that. We will figure something out ongoing. But like I said, it's in the Futures Room and the Mastery for now. So we will definitely address that after the class is done and going into live trading. All right. So I think I've covered all the questions in terms of indicators. And again, a lot of those HPMRs, so I hope that will get you through there. Indicators are included. And how many trades per day? It depends on the market, right? But I usually aim to get 1 to 2 trades. I'm looking for 1 to 2 trades in the indices, sometimes the currencies, gold, crude. My typical day trading day, an active day, is probably 4 to 6 trades. A typical is probably somewhere between 1 and 3. Okay, so not super active. The P&L that you see me for this week is not super active trading at all. That's not going to take you where you want to go. All right. So thank you so much for being here for our webinar. I'm looking so forward to seeing you all in the indicator installation tomorrow. And then for the class on Saturday, 2 days of live trading for the pro, 4 days of the elite. Yes, you can upgrade later. So if you just want to sign up for the basic now and make a call in the live trading later, that's fine. Yeah, that's fine. For those of you wondering. Okay. As far as, I've gotten people asking me about, do we have false signals? Of course. But remember, if you recall during the class, I said we never just use one tool. We want to stack them. And when we start to use multiple confirmation across time, volume, volatility, and price, and I haven't even introduced the underlying tools for the environment. That's another element, right? I'll teach you in the class. Once you start putting more of those in a row, you'll find there are fewer false signals. Do we lose? Of course we lose, right? But there are far fewer, as we say, false signals or signals that just don't follow through because we have multiple confirmation, not just one tool, multiple. Okay. All right, gang. I look forward to seeing you tomorrow for the indicator installation. Stoked to see you on Saturday. And cannot wait. Steven says, I'll see you Saturday. If this class is anything like the others I've done, you'll be drinking from a fire hose, and the ROI will make it the cost a no-brainer. Well, thank you, Stephen. Looking forward to it. Yes, all the indicators come with each level: basic, pro, and elite. All right, gang, be good to each other. I'll see you tomorrow, and then I'll see you on Saturday.